Investors and traders, welcome to the channel Market Chart Pattern. Today is 9th of December 2023, and I hope everyone is having a great weekend. First of all, apologies for the lack of videos over the last week and a half, maybe a couple of weeks. Do apologize. I wasn't able to make the videos, but I'm going to be much more regular creating the videos because my travel is coming to an end. So apologies for that. What we are going to take a look at in this segment is the key US technology stocks that we follow. And I'm also going to add a few more stocks to our list, which we would like to follow up regularly moving forward. And I am actually also going to add some crypto related ETFs such as BITO and Coinbase, for example, as the stock, because the cryptos are doing something which probably is the resumption of the bull run in crypto again. A lot of it has to do with the interest rates expectations and also the way the dollar has been trading. But that's a topic for another video. We will start by taking a look at the Oracle Corporation. This video is for educational purposes only and it is not a financial advice. So what we are looking at is the daily chart of the Oracle Corporation. They are in the business of relational databases and also to some extent cloud, because apparently they are moving their database into a cloud. And also I believe for the TikTok for the United States, the Oracle Corporation actually has the control over the database. That's in the news. We can check in on Google. So what it has done is, in fact, it has formed this really big ABCD one-to-one price projection that we really like to follow in this channel here. And in fact, that happened in the month of June. And then over here, what we see is a double top because the price attempted to take that high out, wasn't able to do that, and then it has taken this low out, so that's a confirmed double top. And on top of that, we have the ABCD pattern formation, and the stock was very close to the 1.618 expansion of the BC swing as well. Never quite made that. In fact, it actually didn't even come close to that. But that was another target we would have had if this high was taken out. Now let's take a look at this stock on the this chart for this stock on a longer term weekly basis. And something very interesting here. It's just something to watch and something I'm trying to highlight here. As in terms of whenever this stock has made a top, what we have seen is the distribution come in like this. So this is the .com side of things. So nearly happened more than 20 years ago, and then the stock just went into a pretty long duration correction. And we all know that in 2002, thereabouts 2003, that recession ended, and the stock had retraced about 78.6% Fibonacci retracement. And ever since, there has been a nice rally higher for the stock. And here is when the COVID lows were made, and then obviously another correction here last year in September 2022, and the stock had a pretty strong parabolic rise here. And if we just look at the pattern kind of formation here, it looks like there is some distribution going on. And what we'll be watching for is this. We'll draw a Fibonacci retracement. So here we go. And where the stock has found support is from the 38.2% Fibonacci retracement. And if this level of 102, let's call it $100, because it's a psychological level, and of course the market was trying to test that as well. If that is broken to the downside on consecutive closing basis, and then the next one we are looking at the 61.8% Fibonacci retracement, which comes roughly around the $85 per share level. And then of course we have this rising 200-day moving average. That's going to be the kind of the last defense, in my opinion. and then we could be looking at these lows here around $60. And if these lows are taken down, then of course the stock is in a bear market. The swing low has been taken out, and it could go down for quite a while, but this is what we are looking at for now. Let's take a look at Amazon. Okay, so this is the stock of Amazon. I have done quite some time ago a longer term pattern formation discussion on this, that how the stock likes to form double tops and double bottoms. And this level here around $81 per share level, $80 per share level, when the stock did make a bottom earlier or towards the end of last year. Then that was also a double bottom formation here, and we were actually talking about it. In fact, I have the notes here, potential double bottom here. And what the stock has done is it has gone and retraced 61.8% Fibonacci retracement, and it is here again a double top here, maybe kind of a triple top, but it's more like a double top formation from this longer term perspective. The stock is just trading sideways for quite some time now, quite a few days. So this is the level that we are watching. We know that the stock likes to form double tops and double bottoms, and there could be a perhaps a move lower in this stock. Although we are in this holiday season, there are massive sales taking place, and the cloud business is also a AWS side of things. Returning back to growth, all of those things, but that might have already been factored in from a price perspective. So this is what we're watching on the daily chart. On the weekly chart, here we go. We can clearly see the 61.8% Fibonacci retracement. We can also see the stock just being, stalling there for a couple of weeks to maybe 3 weeks here. And it just needs to convincingly take this level out. And if we begin to see, the bearish candles form here, then it's going to be a sign that this stock perhaps might be heading lower towards at least a 38.2% Fibonacci retracement, which could see the stock come back right into this region around $122 to $125 per share, roughly speaking. While we are taking a look at this, let's also take a look at the Shopify. So this stock is also related to e-commerce. It is more like a shopping cart website with integrations with marketing platforms like Facebook, known as Meta now, Google, etc. And what we have seen is that we were looking at this ABCD price pattern, and it came in just perfectly. Earnings came out, a nice gap up, and what we have seen is the stock move higher. Our target for a long time has been about this $80 per share level, because that's the 38.2% Fibonacci retracement. The chances are it is likely to go to anywhere between $78 to $80 per share level. This is what we are watching. There has been a bit of a consolidation over the course of last week, and the price is hugging this 20-day moving average, but that remains above the 200-day moving average. So from a momentum perspective, the stock is also pretty strong. We think there is a good chance the stock goes and actually meet our target, which is at the $80 per share level. And this is the weekly chart, and here this is gonna be 38.2% Fibonacci retracement coming in around $80 per share level. And of course we have the one-to-one price projection ABCD higher with around $95, and we have the 50% retracement come in about $99 per share level. So once this $80 per share level is taken out to the upside, if that scenario takes place, then the next area we are looking at is about 95 to 99, or roughly speaking $100 per share level for this stock. Okay, let's also take a look at coin. So this is the daily chart of Coinbase, which is a crypto exchange, where several cryptocurrencies, crypto assets are traded. And we can see that since its IPO, it has followed a typical cycle of an IPO. I will talk about more about this, where I will discuss several of the IPOs which take place. There is a typical kind of a cycle that takes place in an IPO these days now, which is very different to the way things used to be during the dot-com boom era. And it has just taken the lows out of the IPO. And of course, the crypto winter has been here. We had the stock bear market, so several things going on. And here for a long time, this stock just went sideways, and now it is breaking out. So here, clearly what we can do is just draw a line here. So that was where the stock just broke out of this range, and it's very close to this 38.2% Fibonacci retracement level. And we have the structural resistance coming here as well. So here we need to be careful, although we have had a very nice move higher. But it looks like the way the price is moving at the moment, and because of the 38.2% Fibonacci retracement coming in, just not that far away, and we have the one-to-one price projection, that ABCD pattern as well. I think we need to be a little bit careful because the price might have extended itself, and there's a possibility we could find some decent resistance from here, and then price could actually pull back right into the trading range, which had been here, and broke out of that range, and go and touch the 20-day moving average, even possibly the 200-day moving average. It will all depend how the price will behave around this 38.2% Fibonacci retracement. Then let's take a look at the BITO. This is the ProShares Bitcoin Strategy ETF. We see a similar kind of pattern formation here as well, much like what we see in the Coinbase stock that we just had a look at. And what we can see is that here, when it was forming a bottom, it had a very nice one-to-one price projection ABCD. Too bad I wasn't covering this stock or this ETF for our videos. Otherwise, it would have been something very nice to take a look at. And look where BITO is at the moment. It is this one-to-one price projection ABCD pattern that we like to take a look at here on this channel. Let me just quickly mark this as well for our future reference. And then this is gonna be the C leg, and then the D leg, which could extend potentially, but because we'll have the confluence of two things coming together. We have the 38.2% Fibonacci retracement coming at around $22.70, and then ABCD pattern formation. This is where the price is right at the moment, around $21.90. So again, we need to watch this region very carefully, because there is a possibility that's going to be the first 38.2% Fibonacci retracement with the ABCD pattern formation, that in fact we could see some pullback happen in this market, i.e. the Bitcoin. For the Bitcoin cash market, I will do a separate video, and I think we'll also start a new segment where we will begin to look at cryptocurrencies and crypto assets more in detail. I think that deserves its own dedicated segment along with the US dollar. Okay, so let's take a look at Apple. So here we go. So Apple, as we were looking at when Apple was forming this bottom, we were watching for this pattern formation highlighted in this pink shaded area, but it did not quite make it, but it came very close, and I think that was just close enough. And then we had targets initially of around 61.8% Fibonacci retracement, which was around $185 per share level. And of course, it just seems to going for these highs again. One thing that I would like to point out is this. We had called this level, you can watch the previous videos, around $200 per share level. That was our target when the market had formed this bottom and was trying to get out of this range. that once broken out, this is the level we were looking at. And the reason was that we have a confluence of two things coming together here. We had the 1.27 Fibonacci expansion of this entire range, and then when the market started to trend higher, the 1.618 expansion of this AB swing came around $200 per share level as well. And now what the market is doing, there's a possibility we have the 1.618 expansion coming around $218 per share level as well. So if these highs are taken out, then a shorter term target for us will be the $218 per share level on this stock. Let's take a look at Microsoft. Here we go. So the Microsoft, the daily chart of Microsoft, it went right up to the $380 per share level. That was our target, because it was the 1.272 expansion of this move lower. And while it was moving lower and forming this double bottom, it had retraced right to the $310 per share level, and this is where we were getting bullish, and especially when it formed this double bottom and price was not able to take out these lows. It was a pretty good sign, and we have this $380 per share level as our target. For now, we're just watching how the price is going to behave for this stock. Let's take a look at Netflix. So here we go. So Netflix, we had a long-term target when the stock was, in this moving in ABCD pattern formation of about $493 per share level. It didn't quite get there, but it came close enough around here. We spoke about that. Then when this pullback began to happen, we were anticipating it was going to be a ABCD one-to-one price projection lower, because the price had actually rejected the 61.8% Fibonacci retracement and moved lower, and found support, pretty good support from the 38.2% Fibonacci retracement. And now what the stock is doing is just forming this double top kind of formation. So I'm just watching the price action, and we'll see what is going to happen from here onwards, because the 61.8% Fibonacci retracement coming around $493 per share level might be a resistance level, which is just hanging right at the top, and if the price begins to fail to move higher and take these highs out, that's gonna be a double top formation. So we're just watching the price action for this. Let's take a look at NVDA. So this stock has been powering the AI, and when this stock was just moving really higher, it was really starting its move higher here. It was really impacting the broad averages such as Nasdaq, and it's just been a fantastic run, just incredible. We had pointed out this level of roughly, we were saying $500 per share level, but the exact level was around $493 per share level, but the price did make $500 per share. It did exceed and breached that level a little bit. It looks like that 1.618 is basically an expansion of this entire move right here. And it looks like that's gonna be a resistance level for quite some time, if particularly if it's gonna be a double top formation as well. So just moving on to the weekly chart for this, just to show you something right here. So on the weekly chart, we have two things. We obviously have this 1.618 expansion of this BC swing, and then we also have this 1.272 Fibonacci retracement, Fibonacci extension level coming in here as well. So here what's going on is that what I've highlighted in this pink shaded area, this is a variation of a concept called a T5, or a reverse point wave. You can Google about it. Maybe I'll do a video specifically about this pattern formation, if indeed it is that pattern formation. It's a pretty rare pattern to occur, but if in fact if it does happen, then usually there is a pretty good pullback, if it because it usually marks a top. So again, the stock is fantastic. The company has had really good earnings. Just saying that the price action might be a little bit extended from a technical perspective. So just watching this level really carefully. If the stock is going to with a strong power is going to move out of this $510 per share level, then it's really bullish. But looks like it might retrace, move lower, might just go and test these lows again around $410 per share level, and in fact it might even retrace right to 38.2% Fibonacci retracement at around $350 per share level, where we have this structural support coming in as well, but it's just a pullback in a bullish stock, but I'm just watching this pattern formation, and there could be just over hanging resistance right here for the stock. So just watching that. Let's take a look at Roblox. Here we go. So this Roblox actually had been disappointing for us because it broke our point C level. I need to update the chart, but it has been rallying for some time, and that's encouraging. But looks like there is pretty much quite a lot of supply around this region. So it's really this $48 to $50 per share level, which it really needs to get above, for our regional target of about $60 to be reached, $56 to $60. So we are watching this for sure, because this stock is related to metaverse. That's another theme that we're following here. And talking about that, let's take a look at Meta platforms. Here we go. Pretty strong looking chart, and here again, what we are watching for is how the price is going to behave here. Pretty strong. It found some resistance at the 78.6% Fibonacci retracement, pulled back again, tried to take that high out, pulled back, then finally able to take that out, and it looks like it's just going for these highs around $350 per share level, and then pretty much towards the all-time highs. Watching this price action is stock, but it looks like Facebook, formerly Facebook, but Meta is back in fashion. Let's take a look at stock we normally don't look at too much. Baba has been a bit disappointing. It is an e-commerce giant from China, and we had a projection of a possible APC pattern formation, which could take the stock to about $140 per share level. But the vital thing was this point C remained intact as support. It did not. That has changed the pattern, and I will update the chart as well. But just wanted to give a quick update. Also, let's take a look at Symbiotic. So this is a stock related to artificial intelligence and robotics. We were watching this level, 29, roughly $30 per share level, because this was the 61.8% Fibonacci retracement of this move higher and then a pullback. We got a nice move out of it, went to retrace about 50% of this swing, moved lower, and then of course some earnings came out, and it had a nice move higher right to the 78.6% Fibonacci retracement. So just watching this stock now, what it's likely to do. Maybe it pulls back, or if it's taking these highs out, then of course it's starting its leg higher. So just watching this stock for now. And if you guys know of more artificial intelligence related stocks that you want me to take a look at, and we will for sure, I will take a look at those, do a video about those from a pattern recognition perspective. So please do put that in the comments if you would like me to do that. Apologies, the video is getting pretty long, but of course this video I'm doing after a bit of a break, so there was quite a few things to cover. Watch out for the video which I will do next. on the stock indices for the US market that will come out on Sunday. So thank you very much for watching the video. And if you like how we look at the markets from a technical analysis perspective using pattern recognition and Fibonacci ratios, then please do subscribe to the channel. And if you do, then please hit that bell icon button. That way you will know when the new videos are posted and you will stay alert. So thank you very much. Good luck and good trading. Apologies for the long video. Have a great weekend.